Stocks notch up some gains as an end to the US shutdown and investor optimism on Indian equities provides a sentiment boost. IT, Pharma and metals are the big gainers while PSU banks trade soft.
The stock of Lenskart recovers after listing at a discount to the offer price of Rs 402 following a strong response from institutional investors to its over 7,000 crore offer. Founder Piyush Bansal sees big need for vision care and believes people will gravitate towards the best brand.
Westside and Zodio owner Trent posts a slow growth quarter with softer gross margins even as cost controls boost profitability. The weak show drags the stock.
The government allows 1.5 million tons of sugar exports in 2025-26 season against the industry demand of 2 million tons. The allowance is, however, higher than the 0.8 million tons permitted in the last season. Stocks of sugar producers perk up.
Principal Secretary to the Prime Minister Shakti Kanta Das says there will be several reforms in the coming days, including in the area of ease of doing business. He adds that the Indian economy continues to be strong, stable and resilient despite trade uncertainties.
Hello, good afternoon. You've tuned into Halftime Report coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me are my colleagues Mangala Malu as well as Ekta Batra. Good afternoon, guys, and surely a good day at least what to start the week with, right? When you're looking at it in terms of the Nifty, 25,600, 100 points uptick there. Sensex managing to hold on to more than 400 points of gain and broader end of the market. That is doing well too, right? Broader end is also holding on to gains of 3/10 to 4/10 of a percent, whether the mid cap or the small cap. Mid cap is doing slightly bit better than the small cap as of now. A lot of movers specifically today in terms of earnings that we're seeing coming in as well. So whether you look at Voltamp, Krishna Diagnostics, all these broader end of the market names doing well in trade as well, guys.
They're doing well. In fact, from Friday's low, the Nifty is rallied about 300 points. The good part is that the Nifty Bank, which took the mantle on Friday for recovery, is holding on to those gains, underperforming today. And the Nifty IT index has come by, so causing that smooth transition for the Nifty, which continues to hold above that 25,600 mark. In fact, currently just below the 20-day moving average, which is around 25,640. So we'll watch out for how that pans out. The IT index doing well. Let's see whether the Nifty Bank in the second half moves higher as well, because the FII shorts, they continue to be piling on in the system. So if the market holds higher, then maybe some more scope for short covering coming in.
Hi guys, yes, absolutely. Maybe the US shutdown, seeing some amount of a deal, possible deal, is what is probably keeping the markets alive. And the stocks or the sectors which are US focused, say for example, the Nifty IT sector or the index itself is up around 1.87%. The Nifty Pharma index is up around 0.8%. So maybe there's some amount of optimism which is circling around those sectors based on what is taking place in the US. So we have the Nifty currently at around 25,622. We have the advanced decline ratio, which could possibly see some amount of improvement on the Bombay Stock Exchange, just about even keel on those levels at this point in time. So let's see how the day goes. But as of now, it seems as though the momentum is on the upside. In fact, we do have Vivek joining in to take us through all of the stocks that are moving around in trade today and which are adding to all of this green. Vivek, over to you.
Well, thank you so much for that. Like you mentioned, it's advances that at this point of time are outpacing the declines, especially in the broader end of the markets. Well, a couple of stocks on the radar, mainly have a look at some of the stocks in the NSE 500 index. The top gainer over there is actually Indigo Paints. Very strong volumes as well. Follow-on buying seen post a very strong Q2, higher by over 11% for that particular name. HBL Engineering, earlier known as HBL Power Systems, that particular stock, very strong Q2, and that stock also higher by over 11.5%. National Aluminium clearly outpacing Hindalco in terms of Q2 performance. Kotak Upgrade 2 coming by 7.5% higher for Nalco. Torrent Pharma, very steady set of numbers for this particular company. They're saying that the double-digit growth could continue. Street clearly likes that, over 6.5% higher. And Nykaa, that particular stock continues to see upward momentum, almost 7% now. And the GMV, or the gross merchandise value, again, higher by over 30%. On the other hand, quite a few laggards as well. NCC from the broad end of the markets, in the post-results conference call, the management had actually withdrawn the revenue growth guidance. That stock down by almost 3%. Medanta, one of the top laggards as far as the NSE 500 index is concerned. Again, margins under pressure for this particular name. Trend, multiple downgrades coming in. Growth concerns persist as far as this high-value stock is concerned. And Trill or Transformers and Rectifiers, one of the casualties of the session today. A weak Q2, margin concerns. Along with that, World Bank has gone ahead and blacklisted this particular name. Street clearly doesn't like that 20% lower as far as Trill is concerned.
Take that point, Vivek. Thanks a lot for that. So those are a bunch of stocks which are buzzing around on the back of numbers, news, and a lot of volumes as well. Greenlam Industries, however, the first management on the show today, the laminate major reported a good revenue. 18% jump out there. Laminates and plywoods business saw improvement. Panels were the ones that was a new addition, or that is what added to their overall revenues as well as against the same time last quarter. Saurabh Mittal, who's the MD and CEO, joins in now. Saurabh, thanks a lot for joining in. Congratulations. The second quarter, despite it being, a challenging one from a demand environment, has done well for you. 18% revenue growth, EBITDA growth of 28% as well. So the question, first half, 15% revenue. The last time you joined us, you said 18 to 20% revenue growth for FY26 with 11 to 12% blended EBITDA margins. You're pretty much there when it comes to the EBITDA margins. But the second half, do you think you can make up for your overall target of 18 to 20% revenue growth for the year?
Yeah, so I think we should be able to make up. And last year, we had a weak H2. And I think with the way Q2 has progressed for us, so I think we are on with that 18, 20%, kind of a top line number for FY26.
Saurabh, hi. Thanks very much for joining in. 18 to 20% growth is what you are sticking with for the entire year. But just give us a sense in terms of what that's predicated on for the second half. If you had to break up the volume mix, the pricing mix, and the segment growth that you're anticipating, what's going to be driving the growth?
So, like if you see in Q2, we grew across all parts of our business. The laminates, the core business, is exceptionally well in terms of volume, value, gross margins, EBITDA margins. The plywood and allied category also did well, with plywood and door doing very well. The chipboard business gained decent traction. We grew about 50% in Q2 versus Q1, and Q1 was our first quarter. So I think going ahead, I think each part of our business, we think will grow, both domestic and international. There could be some gaps here and there, but by and large, we expect growth across every part of our business.
Sure. Saurabh, you're expecting growth across all your businesses. I just want to understand specifically for the panel side of the business, your utilization, I believe chipboard utilization is at 36%. Where do you see that headed now? And what would be the peak revenues that one could see coming in from this business as well in terms of contribution, growth? What can we watch out for?
Right. So Q1, like I said, was a first quarter for that business. And I think progressively we'll keep winning more business, and which will help us increase utilization, increase revenues. We had said earlier, year 3, we expect full utilization. At a full utilization, revenues would be something like a 725 to 750 crores. So that's on the peak revenue. I think moving ahead, we'll keep getting better from where we were in Q2. Can't give an exact number on every quarter, but I think this will keep inching up as we move ahead.
All right, this will keep inching up as you move ahead. Could you give us a sense on the break-even for your veneer business and the plywood business? You had earlier indicated that it's fairly near. So I just wanted to understand on that factor, and exports as well. What proportion are exports at right now, and where do they stand going forward?
Sure. So in the plywood and allied category, we have plywoods, decorative veneer, flooring, and doors. The veneer business and flooring business have already achieved the break-even in Q2. Like we said last time, we're close to it. The ply business obviously is a larger investment, and there too we're winning market share in the premium plywood category, and sales are going up. And you can see in Q2 we did about, I think, 45-50% of growth. So in the plywood and the door business also, door break-even is just at the corner, and ply, I think we will have to still do a little bit more numbers to get to a break-even on the ply business. On the exports, again, Q2 was very good for us in exports. We grew about 10-12%. Revenues were good, and Q1 was a bit weak for us. So, and exports is about 45% of the total revenue of the company, and about 50-51% of the laminates business. So I think exports too, we see decent traction in many markets. And in fact, we've announced expansion for laminates, in this quarter, and we're adding 2 lines of laminates, which will be about 2 million sheets and boards. which will come up by Q4 of FY27. So exports too, I think, should do well overall. Some markets, there could be some challenges, but by and large, we expect decent growth on the export front too.
Okay, so you're expecting maybe a 10 to 12% growth in terms of the export market to continue?
Yeah, we could say that, yes.
Okay. Is that going to be the key driver going forward? If you had to compare it to the domestic business, where are you sort of pushing your energies in terms of incremental growth and capex?
So on the growth, the laminates business is like 50% domestic and 50% international. All the wood business, which is plywood, chipboard, veneer, flooring, door, these are largely domestic businesses. So I think as we move ahead, we expect growth in both domestic and international markets. The recent investments have been largely done on the wood category. So we expect the domestic mix to improve as a percent of the overall revenue mix, but will grow in both the geographies. We have a very strong foothold in both international markets and domestic markets. And I think, we'll keep growing in both the places. And the capacities we built in laminates are of global size and scale. So I think clearly, that's a core strength of the company, and we expect growth.
What would that mix be going forward then? If you expect domestic to pick up in terms of the mix there, what is the mix that you're envisaging? Maybe FY27 end, what would we watch out for?
So my sense would be 60% domestic, 40% exports as a company. Okay. But if you look at laminates, maybe still remain in a similar range of 50% each.
Okay.
Right. And
about 20% to here there.
how much more room do you have for working capital? Because earlier it was 65, 70 days, closer to 70 days. Now it's come down sub 50 days, 47. Right. As we move forward with more plants coming in, more products, more businesses, do you think this is the best that we have in terms of NWC, or at some point you will see further improvement here as well?
So actually, I'm not so sure. We have improved net working capital cycle to 47. This is the best we've done.
Yeah.
Having said that, we still have the chipboard business where the working capital cycle is still not as efficient as we want it to be.
Exactly.
And likewise in the ply business. And we've seen, if you see Q2 of last year versus Q2 of this year, overall revenues went up by about 130 crores. And we actually could reduce net working capital cycle in value and obviously in days also. So I think it depends on how things go. But my sense is if we keep improving revenues, because our collection periods in the market is one of the best, I think net working capital cycle can still improve a bit, but one has to see how this goes actually.
Take that point. Thank you so much for joining in and giving us your outlook on the business going forward. 18 to 20% revenue growth with 11 to 12% EBITDA margin, something you're on course to do. Second half looks a lot better. There are some triggers coming in from new plants, etc. that will play out too. But working capital days, something that we will monitor as we go along, because you've already seen a fair amount of improvement. Take a short break, come back, get you more on the markets. We'll focus on Lenskart and transformers and rectifiers. Stay with us.
Welcome back. Well, 0.5% higher currently for the Nifty. We have the Bank Nifty, which is up around 0.2%. But let's talk about the big debut in today's trading session. In fact, it is the big story of today and has been for the IPO market in the past couple of weeks. Let's focus on the new kid on the block, Lenskart. The company, in fact, did see a bit of a muted debut on the bourses today. It listed at a bit of around a 2% discount at 395 rupees per share versus the issue price of around 400 odd rupees. Now the stock, however, is significantly off its opening lows. But Mangalam, you've looked at the IPO well from the start, and you've tracked it in terms of its anchor book, in terms of what the management said. What's your sense? It's a bit of a subdued debut, you'd say.
Well, it's a subdued debut, but some would say it's a stellar debut given the sort of valuations at which the issue was offered as well. So there's this classic case when it comes to Lenskart, are good businesses good investments? Because from a business standpoint, no two ways about it. It is, one of the best that we have in its segment, 2.5 times bigger than what we have in Titan as well. So let's look at the listing itself. It listed at 395, went all the way down to 354, then recovered more than 10% from lows, and currently is sitting a little above the issue price of 402 as well. There was strong demand for the issue. Total subscription 28 times, retail 7.5 times, HNIs 18 times, and institutions 40 times. It is a company that, designs and sells a wide range of eyewear products. You don't need me to tell that. Just walk down the road anywhere in India, every nook and cranny, you have 2150 stores. And apart from India, they acquired Owndays as well, which is an international company that accounts for nearly 40% of their revenue, the international operations for the company. India margins at 12%, international at 17%. So put that together with increasing contribution from international, there is case for margins improving for them as well. The total addressable market in India, as per them, is close to 80,000 crores and likely to be around 1,50,000 crores by 2030. International, 1,60,000 crores, likely to be about 2,11,000 crores by 2030 as well. They are 2.5 times bigger in sales and footprint compared to its nearest competitor. The organized business is growing at 1.5 times unorganized, and brand Lenskart has presence across all segments. So 18% revenue comes in sub 2,000 rupees pair, and 18% comes above 10,000 rupees a pair as well. So it, straddles on both sides of the value spectrum. They've done about 1,900 crore of sales in the first quarter with around 18% margins and a net profit at 60 times. The question is, where is the catch? The catch is in the valuation, because at current levels, the stock is trading upwards of 70,000 crores in terms of a market cap. Now, even if you annualize the current revenue of the company and annualize the current profitability of the company, it gives you closer to 250 to 300 crores in terms of profit. 300 crores in terms of profit for a 70,000 crore company makes it a 234 times FY25 price to earning. That's trailing, but FY26 as well, upwards of 200 times. Price to sales as well, closer to 8 to 9 times. So great company, but not much left on the table. And today's move also will have to keep in mind that 15% of the equity right now is available for trade. 85% still locked in, with one lock-in chunk opening a month from here, around 3rd February or something. So we'll watch out for how it plays out over a longer period of time, given its valuations and growth, underlying growth trajectory. So that's one of those things that we've been discussing all through ever since the IPO was announced, but even now post its listing. In fact, we heard from Piyush Bansal at the Global Leadership Summit, and this is what he had to say.
I think it is time that we start creating global brands, because my firm belief is that in the long term, if you think 10, 20 years, either you are global standard or you may not, you may cease to exist. What will it take for us to create global companies? I think the most important thing is belief. But today about 40% of our revenue comes from international markets. I think that belief was really important. What we have achieved so far is a very small portion of what we intend to do. We want to give a vision to 1 billion people. We have given it to only about 25 million people so far. Right? So there is a lot more to do ahead. And I do think game is going to be about how do you leverage technology, and this is my firm belief, to solve some of the biggest obstacles in getting access and affordability to people, right? Because what are the two important things? One is, how do you deliver great experience? And second is, how do you deliver it most efficiently? And in both of these, technology has a very large role to play.
Right, so that's about Lenskart. You'll obviously hear a lot more about this company as the months progress. That's up 2%. The listing of the day has seen a big recovery from the lows as well. But one stock which is still locked in lower circuit of 20% is Transformers and Rectifiers, under pressure after having reported a weak set of second quarter numbers and a little more. Vinny.
Hi, yes, so absolutely weak set of numbers that's coming from the company even this time. Look at the revenue, just 0.2% decline that we're seeing, 460 crores. So not much of a change there. Execution, that continues to be a problem, seems like it, and that's not changing. So that's a big challenge for the company. Apart from that, when you look at it in terms of margins, 11.2% was in 14.9%. So around a 300 basis points contraction in terms of margins. Mainly the factors that impacted the margins obviously is the higher staff cost, other operating expenses, that's higher as well. So that impacted the margins. So this led to the lowest margins that the company has seen since Q3 FY24. And obviously it's much below their guidance range of 17 to 18%. They had mentioned this 17 to 18% the last time they spoke with us as well. Now order book, that's also not looking exciting when you look at it, right? Overall order book at 5,472 crores. Last quarter, it was at around 5,246 crores. Inflows are at 590 crores versus 665 crores was the inflow last quarter. Last year also, it was somewhere around 700 crores in terms of inflows. So a big challenge that comes in there in terms of numbers. But apart from that, there was one more news flow where World Bank has debarred the company on bidding on its projects, financed projects, for engaging in some corruption or fraud related some issues that were going on in Nigeria. So there's some investigation that is going on that front. But right now, the World Bank has debarred the company from that. So that is what we'll be keeping an eye out on as well. But today, obviously, because of all these news flows, we're seeing some bit of a pressure, and obviously the stock is locked in lower circuit as well.
Okay, all right. So that's transformers and rectifiers. That stock is down now, whopping 20%. But before we move on, just want to point out MCure should come up for you because they have, announced a tie-up on Wegovy with Novo Nordisk, and that's the reason why you're seeing the stock up around 6.5%. They will be selling a different form of Wegovy, which is basically the same drug, but marketed differently, or, the brand name will be different in the Indian market, and it's going to be an exclusive tie-up with Novo Nordisk, and that's the reason why you're seeing the stock higher by around 6.5%. We'll get more details on that, but as of now, we'll take a short break and we'll focus on a lot more stocks which are buzzing on the other side. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. As of now, Nifty is managing to hold up to 25,600, 0.5% of gain for the Nifty is what we're seeing. Sector-wise, like we mentioned before as well, IT, Pharma managing to do well in today's trading session. IT, obviously, we're seeing Infosys, LTIM, Oracle Financials, that is also managing to hold on to good gains as well as Emphasis. But a lot of movers are coming in terms of the broader end of the market as well. So that is what we'll be keeping an eye out on. But let's go across to Mangalam now, who's here to tell us what's happening in the world of F&O from the F&O desk.
Well, the Nifty is holding around that 25,634 mark, which is a near 300-point recovery from Friday's low, 140-point gain today as well. And a large chunk of that gain is courtesy Nifty IT, which is up around 2%. The Nifty Bank holding above 58,000, but not the best participant in today's trading session, just supporting the frontline index after a big rally from the lows on Friday. And which is exactly why the India VIX hasn't seen a big fall. In fact, when we had declined from the highs, the India VIX did not see a big rise, and now it hasn't seen a big fall. The Nifty is very close to its 20-day moving average of 25,639, and that will be a bit of a fulcrum as we move forward. If the Nifty crosses this 25,639 and closes above that, as it had been over the last few trading sessions, it's been under that. If it crosses past that, then they could lead to some short covering by the FIIs. Why do I say that? Because, November 5th, the FIIs were 15% long, coming down to 13%. In fact, the start of the series, they were 20% long as well. Put writers are fairly active today. 25,600 put and the 25,500 put. Both of them fairly well shorted today. And that's telling you that maybe the street believes that the base for the market has moved higher from, earlier 25,300, 25,350 to closer to 25,400 to 25,500. So that's something we'll be watching out for. On the way up, however, the current congestion zone needs to be crossed because 25,650 call writers still active, telling you 25,700 thereabouts. There could be some selling, and the 25,700 call too. So between 25,700 to 25,750, there could be some supply. That's what the call writers are playing for. A lot of stocks on our radar. Nykaa did well in the morning today. A lot of shorts caught on the wrong side. They covered their position, and now the stock is seeing some fresh long build up. But some shorts still stuck in Uno Minda, Nalco, Nuvama Wealth. So short covering underway in a massive way in all these stocks. And fresh shorts right from the word go. Trend is one of those stocks. Top Nifty loser after slowing revenue growth, and open interest is up 18%, telling you the shorting activity is fairly high on Trend.
Okay, all right, Mangalam, thanks very much for that. So that's on Trend. That stock down around 7.7%. At one point was the darling of the markets. But just want to point out that Krishna Diagnostics is doing very well in trade today. That stock has spiked up to a gain of around 13.5%, reacting to its numbers. 819 odd rupees, still, a bit of a distance from its 52-week high of around 1,041 odd rupees, but doing well post its numbers. That stock up around 13.5 odd percent. Take a break. On the other side, Manisha Gupta will have Deepak Balani, who's the Director General, Indian Sugar and Bioenergy Manufacturers Association. Stay tuned.
Welcome back. Joining us on the show now is Deepak Balani. He's DG at ISMA. Mr. Balani, thank you so much for joining in. And the season 25-26 for the sugar industry has started on a positive note, with government allowing 1.5 million tons of export. The concern, though, for immediately would be the parity, because the international sugar prices are trading at a multi-year lows. When do you see an opportunity window opening up for India to be able to export?
Thank you, Manisha ji, for having me in your show. First of all, we welcome the government's decision to permit the export of 15 lakh tons of sugar for this season. And as requested by ISMA, based on the surplus sugar production which we are expecting in this season, so this timely move will definitely enable the industry to plan the production plan for both raws and whites. And this will also ease the domestic stock pressure and also somehow try to stabilize the domestic prices. Having said that, as very rightly mentioned by you, the parity is not there in the international market today. Well, London white today is around $410 per ton, which approximately comes to around 34,000 per ton. And even the New York raw is around 14.1 cents, which approximately is 28,000. So the parity is not there, but we are hoping, and as we had requested the government, that an advance permission will help us in perhaps planning for the raw production as well as also doing some advance contracts. And we are hoping, looking into the situation where there is an expected trade gap in LQWs starting mid-December until 31st of March, when the Brazil sugar is not in the international market. So there could be a parity. Okay. And having said that, we are hoping that we will have a window for 3.5 months where we can export raw and both whites in the international market. 15 lakh tons should be doable, I believe.
Mr. Balani, one thing done, but there is still, it's still desirable that the ethanol diversion and the MSP and then the ethanol price revision, I mean, those are three top things for the industry. Are you anticipating that that being something that industry would also get from the government?
Definitely, yes. The expectation is always there. We never lose hope, and that is the job of ISMA, to always try and help the industry through policy advocacy. And very rightly said, so this is a good start of the season where we have got an advance permission to export. Having said that, this is a temporary relief, definitely will give a boost to the industry, but a long-term permanent reform structure specifically related to the revision in MSP and ethanol prices, as well as ethanol allocation, is a very, very important aspect, which perhaps need correction by the government through their policy intervention. MSP, which has not been revised for last 5 to 6 years, still stagnated 31 rupees a kilo, which is very unrealistic given the fact the FRP and FSAP has increased, and the realistic cost of production today is almost 41 to 42 rupees. So in order to make sure that the domestic XP prices don't drop below 40, 41, there has to be an MSP. Perhaps that is the only thing which will give a good support to the industry as well as farmers. And as you very rightly said, ethanol pricing, we have been discussing this for quite a long time. But I believe that also, to me, I think it is somewhere in the horizon, and definitely we will be able to achieve the price correction in both juice and B-heavy, as well as the ethanol allocation. Allocation has been very poor this time, 290 crore litre, very poor. So we will have a lot of unutilized capacity. So we have suggested certain measures for the immediate relief for the ethanol capacities to be utilized, and also some permanent and long-term relief.
Mr. Balani, I also want to talk to you about the kind of investments that the sugar industry have made in sense of ethanol. And as you said, the capacities are underutilized, allocations much less than what the street was anticipating. So how much are the underutilized capacities right now for ethanol? What is the kind of investment that has been made for ethanol? And would you say that is at this point in time at a pause because we do not know whether or not there is a framework or a plan in the very near term for beyond E20?
No, as very rightly mentioned, industry has invested 40,000 crore rupees and has capacity of almost 900 crore liter. And this capacity was put up by the industry based on the Niti Aayog's report, which said when India will achieve E20, 55% of the share will be with the sugar feedstock. And also the ethanol blending program, where there was a commitment of both offtake and pricing based on FRP. Now, that is something which is not happening. Allocation has been near 289 crore liter against the expected 450-500 crore liter. So that definitely, so the capacity utilization is hardly 30-35%, which is very, very low. And it is very, really unviable for our capacities to be operational. And it's not viable. So it directly affects the entire sugar balance sheet and also puts pressure on the domestic prices and ultimately puts pressure on the cane areas. Having said that, I think there are certain measures which needs to be taken in allocation. One is that at least reserve 50% of the ethanol allocation for sugar feedstock so that we have 50% share and we have a guaranteed offtake. We also, for example, there are certain priorities for juice and the heavy within the state. Perhaps we have requested the government that the priority should also be extended beyond the state in the deficit states as well.
Okay.
And third is that, we import almost 100 crore liter of denatured alcohol for our ENA use and chemical industry. And since we have too much of capacity today, which is unutilized, maybe the import could be restricted and denatured alcohol by the chemical industry could be procured by the ethanol production capacities in India.
Okay.
And also we have requested the government to allow export of denatured alcohol, ethanol. So even although there is no parity as of now, but if the permission is there and we see that there is a parity coming, at least the industry could export some of it outside. And the cycle 2, which we are expecting for Q3 and Q4, which perhaps could be around 150-200 crore liter, we have requested the government to at least reserve 100 crore liter for the sugar feedstock.
Okay.
These are some of the immediate relief which could be provided to the sugar industry. This is something which is perhaps could be provided to the industry immediately.
Okay, absolutely. Point taken there, Mr. Balani. Thank you so much, Manisha, as well as Mr. Balani, for joining us this afternoon for the conversation as well. But on that note, we're going to slip into a very short break. After the break, we'll get you the management of Aarti Drugs to decode their Q2 numbers. Stay tuned in.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Let's talk about one particular company, Aarti Drugs, which in fact has reported what was a good set of numbers. The company witnessed a recovery in terms of margins. The company says Q2 was aided by favorable export mix as well as execution. We have with us Adish Patel, who's the CFO of Aarti Drugs, joining in. Adish, thank you very much for taking the time out. Well, it's a 9% growth this quarter. Just tell us how the API business did in particular. What was the volume and price offtake, considering that you have indicated that the past 2 quarters odd, you have seen a recovery in demand?
Yeah, so the API volumes actually grew by 9.33% for this quarter, year on year. And majorly entire volumes were driven by because of the exports. In fact, in domestic market, we suffered a couple of percent volume degrowth, especially because of the antibiotic segment. But the export market did fantastically well, as well as the formulations also increased quite a lot. And that is why we got overall 9% value growth for this particular quarter.
So you've said that your exports did very well this quarter. You've said that your momentum also is expected to continue. So put some numbers to that. How much did, say, the domestic market grow this quarter? How much did exports grow this quarter?
Yeah.
And what are you guiding for both segments?
Yeah. So in fact, we saw around 30% volume growth for exports this particular quarter. And overall for the standalone company, around 42% of the sales came from export market, which is pretty steep. Earlier, we used to have it around 36-37%. And even for formulations, the export market was around 68% of the total sales. And that is the main reason why we saw better margins in this particular quarter.
Okay, so that was the main reason for better margins in this quarter. But then do we start expecting better margins going forward as well? How is the export trend now in Q3? Do you see that continuing?
So the export will continue a little bit, but mainly we are banking more on the fact that two greenfield projects, we will see more and more volumes in those greenfield projects. One of the greenfield project which we just started in September month is doing very, very well. All the quality parameters are matching, impurity profiles are excellent. Whereas the first greenfield project which we commenced last year actually in salicylic acid, we still are carrying few losses which are being expensed out in the current P&L. So whatever numbers you are seeing is after taking into account those losses. So once we reduce those losses, the P&L will look drastically different.
And then margins by the end of the year would be better as well, right? So
Yeah,
we could start seeing better margins in Q3, Q4.
Yes, yes. So Q3, typically Q3 for our business is lean, mainly because we have certain therapies like antibiotics and antidiarrheal, which are acute therapies. And December quarter, typically offtake is a bit less. But March quarter should be really good, what we expect.
Okay. Just a couple of questions. Formulations. What was the growth this quarter for your formulations business, especially from the regulated markets?
So overall formulation growth was around 26%. It would be difficult to pinpoint the regulated market growth, but majorly the entire growth has come from the export market. And that is why the percentage of exports to the overall formulation sales for this quarter is around 68%, which typically is around 55%.
Okay. All right. Just one quick follow-up. You seem to be actually focusing on oncology as a segment now. Just give us a sense in terms of how much revenue are you getting from the oncology segment as a therapy, and how much of a push are you looking at when it comes to oncology?
Okay. So this oncology segment is definitely a very long-term game for us. Last year, we just got a formulation plant approved by US FDA for the oncology segment, which was a very important thing, first milestone for us. And then we are registering a lot of oncology molecules. We are doing a lot of R&D in oncology. In fact, you can say 30% of the total capex or investing cash flow this particular year went into formulations, and a majority of that went into the R&D development of oncology products. So we are developing a big basket. It will take around 3 to 4 years for it to meaningfully reflect in the revenues, but the total potential of these molecules from the plant what we have is around 500 to 600 crores per annum. And once we hit that, then definitely the margin profile should look starkly different from what it is right now for formulations.
What would it be?
So as of now, our formulation EBITDA margin is quite less. In fact, it is slightly lesser than our API and Spec Chem business. Our API Spec Chem business was around 13+% EBITDA margin for this quarter, and formulation was 90 basis less approximately.
Right.
So what we expect, for oncology, for only oncology segment, the margins should be much higher. Let's say in 20s to late 20s. But overall, on aggregate basis, we still would like to achieve that 20% mark for formulation business.
And on API, what's your prognosis on the prices? Do you believe that we bottomed out, or do we see some further correction from current levels? Because that directly impacts the absolute revenue that you guide for, right?
Right. Definitely. So we were expecting that in terms of year-on-year perspective, that we will see some negative price variations in September quarter, and that happened. Means we saw around 3.5% to 4% negative price variation in September quarter. In spite of that, we had a value growth of 6%. the prices have definitely bottomed out. In fact, for few of the molecules, we have seen the prices are slightly going up based on the raw input prices.
Sure.
And certain molecules, it is going down, but it is more or less stabilized.
All right. Just a quick last question, Adish. Are you all participating in the GLP-1 opportunity because you have an anti-diabetes segment? Is GLP-1 a part of it?
Yeah. So as of now, means for next 5 to 10 years growth, we are engaging outside consultants as well to develop a product portfolio to take care of growth from, let's say, 5 to 10 years perspective. And in that, we will definitely evaluate these molecules. But as of now, we are not announcing anything that we are venturing into that particular segment.
Okay. All right, Adish, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Aarti Drugs. The stock is up around 3.6% in today's trading session. Reacting to its numbers, we'll take a short break, but we'll get you a lot more on the markets once we're back. Stay tuned.
Welcome back. A solid up move continues for the Nifty. In fact, we're back around the high point of today's trading session, closer to 25,650, and that up move has been led by two underperforming factors. The IT stocks continue to do well. The Nifty Bank, when we started the show, was up around 0.5% or 0.2%. Right now, that's spiked, and that's courtesy ICICI Bank and the others. And before we wrap up on the show, just keep an eye out on Reliance. That big boy too, moving and has taken the Nifty higher. So ICICI Bank's moved higher. Reliance is at the high point of trade, and that explains why the Nifty is at 25,650. Take a short break, come back, get you more of the markets. Business Lunch takes all of that action ahead.